We're looking at question 2, which is based on limited liability company. So part 1 of part A is asking for one advantage of limited liability company. And the main advantage is that it protects the shareholder's personal asset. In the case of bankruptcy, the only amount of money that a shareholder will lose is the amount invested. In addition, you have various ways of raising funds if you have a limited liability company and if it's available on the stock market. Therefore, you can have shareholders right across the world, providing that they are on the stock exchange market as well. One disadvantage of a limited liability company is the filing. The company has to file all of their financial statements with the House of Company, and this house of cooperation, basically all the financial statements are available to public, so public can scrutinize the financial statements. In addition, you will have to audit your financial statement, which means that it will cost more money. So we have protect shareholders' personal asset, and we're talking in terms of bankruptcy. And another one could be more access to funds. For disadvantage, we have public financial statements, and another one will include auditing fees. Alright, so let's look at the other part of the question. We are required to use the form below, prepare journal entries to record the issue of shares and debentures for Rosedale Company Limited. Narratives are required. Okay. In May 2023, Rosedale Company Limited sold the following shares and debentures to increase its liquidity. Alright, so we have three sets of things. So we have ordinary share, we have preference share, and we have a debenture. So these two basically form equity, which is technically capital, not capital, technically, and this here is a liability. We good there? So technically, once again, all of these will have a credit value. So the debit will be either bank or cash. We do not know because it's not stated here. So preferably we'll use the debit as bank. Alright, so on the 5th of May, 180,001 ordinary shares were issued at par value. Basically, it's issued at $1. Therefore, this will give you $180,000 raise. Right, so May 5th, 2023. We will use bank, and we have ordinary shares. Alright, so our narrative, basically, what did we do here? So we issue 180,000 ordinary shares, well, $1 ordinary shares at par. On May the 5th, 100,000 preference share at par value, but one share cost $4. Therefore, we raised 400,000. So May the 10th, bank 400,000, preference shares 400,000. So issued 100,000 $4 preference share at par. And the final item, $5 debenture valued 150,000. So debenture is a liability. We issue a 5% debenture 2023 to 2025. And that's it. Alright, state one ratio that can be used to calculate the liquidity position of the company. So we have current ratio, or asset test, or quick ratio. Next part, calculate the total dividend payable at the end of the financial year for the transaction on the 10th of May 2023. Show our working. So the 10th of May we issued 100,000 8% preference share. 100,000 4%. Is it 4%? 4%. 8% preference share. Alright, so to calculate the annual dividend, you use the formula. Annual dividend equal number of shares times the par value times the rate. So number of shares is 100,000. The par value is $4. And the rate is 8%. This is going to give you $32,000. So next part, we are required to calculate the total amount payable for debenture interest at the end of 1 year. So we have debenture $150,000 at 5%. So and this will give you $7,500 per annum. Alright, let's look at part F. At the end of the year's operation, Rosedale Company Limited calculated a net profit of $48,500 before debenture interest payments. Calculate the total amount available for paying dividends to ordinary shareholders. So apart from debenture interest, you will have to minus the preference share dividend as well. So that's here. So let's go. So we have net profit, and we have 48,500. Right below that we'll have deductions or less debenture interest. And this was 7,500, and preference share dividend, which is 32,000. this will give you 39,500. So this amount here is available, amount available to paying, amount available for ordinary shareholders dividend. Alright, so the final part, calculate the percentage return on investment for ordinary shareholders. Alright, so for this part, we'll derive a formula as in return on investment equal ordinary shareholder dividend divided by the number of ordinary shares. So the dividend is times 100. And the number of shares is 180,000. And this will give you 5%, which is not that good.